Hi. Well, I think the obvious topic that we have to discuss today is really around what the Fed's decision is going to be. The Fed meets tomorrow. There's been lots of speculation that there is going to be a 25 basis point cut, and that is likely that that's going to be what happens. The money market is pricing in that we're going to have two cuts in 2026. These would certainly be positives for equities in general. But we did get a really strong jobs number, and that's more hawkish. That leans more towards the Fed basically doing less. So it's very possible that we get a cut, 0.25% cut tomorrow, and then language that the Fed is going to be less accommodating moving forward. And I think there's a couple things to talk about. Number one, I know I've mentioned this in the past, but the Fed's mandate is price stability, making sure that we do not have an inflation problem, and then also stability in employment. If the jobs data is theoretically improving, that's a reason for the Fed not to continue near term to cut interest rates. What's really important is we want to make sure that we have tools in place that when the economy really does slow down, we have the ability to stimulate the economy. So I think sometimes this is lost. There's lots of speculation about the Trump administration putting pressure on the next Fed chair to bring down rates, but the Fed really has to act in line with what their guidelines and their mission is. And again, it's price stability and making sure there's stability in the employment market. What I think is really important, we have seen the yield on the 10-year move up. So it's back around 4.2%. And again, we had these issues in the debt markets a few weeks ago, and things have kind of quieted down a bit. But I would not be surprised if we start seeing some issues come up in January, either in the private credit market or in the public credit market, especially around AI spending and the level of spending corporations have had, and just the level of debt that we have in the U.S. That could be something that we see. The yield curve could continue to steepen significantly, especially if the Fed cuts short-term rates tomorrow. So more to come. Thank you so much.